investors are keeping their eyes on the tech sector as the first quarter of the year comes to a close with some names in the Magnificent Seven that we've been talking about showing signs of a slowdown. First 3 months of 2024 saw shares of Apple falling 11% and Tesla dropping nearly 30%. Alphabet shares rebounding now, but they have remained at lows for the majority of the quarter. And then for the remaining four, Nvidia, Meta, Amazon, and Microsoft, they are continuing their run and are still outpacing the broader market. So let us bring in now Bob O'Donnell, technical analysis at TECHnalysis, research president and chief analyst. And let's just get your firsthand blush. What is the discussion regarding concentration? Is it overblown? Are we overthinking this? Your thoughts on the Mag 7 or Mag 4?
No, hey, thanks, Jared. Thanks for having me. Look, the AI train is moving full blast ahead, and obviously the people who are most directly associated with that, I think, are going to continue to benefit. So it's going to be the Nvidias, it's going to be the AMDs. Lately we've started to see some of their suppliers, some of the people who provide the memory chips for them, the Microns, the Samsungs, the SK Hynixes. All the cloud guys are very much involved with AI, hence your Microsoft, your Alphabet/Google, and your Amazon. And we're going to start to see other enterprise software companies start to, I think, move forward as well. Oracle has been making a big play there as well. I mean, Adobe's had a bit of a tough time. I was at their conference last week, and they're talking about a theme that I'm hearing a lot lately, which is, hey, 2023 was a year of experimentation for Gen AI and businesses. 2024 is the year of implementation. And we're starting to see companies do that. And they talked about bringing, they have Gen AI in their creative products like Photoshop and Illustrator and Premiere, but now they're bringing it to the other side of the house, which does the management and tracking of all this stuff. They have a product called Gen Studio. I was just at their conference, like I said, last week. And, we're seeing examples like this all over the place of these companies who've been longtime tech players really driving forward. You also have the big data companies, the people like Snowflake, like Cloudera, and some of these other companies who are involved with helping companies prep their data to be used with generative AI. So all the different piece parts that lead to that generative AI engine, I think we're going to continue to see long-term growth. There may be some stumbles in the short term on a couple of these, but I think longer term, it's still a good story.
Well, talk to me about the degree of the long term, because there's been some division in the commentary on the street when it comes to the uptick in AI, particularly with regard to chips. Is that kind of a one-time purchase that we're going to see a surge in over the course of, let's say, the next year? Or does it have legs moving into, let's say, the next decade even?
Well, it's a great question, Madison. I mean, look, the one thing is Nvidia's got 90% share, right? Anybody who's got 90% share is going to lose a little share, but that doesn't mean they still can't grow, organically from where they are. It's just you're going to see a lot more competitors. So if we look at it collectively, I still think there is several years of growth in the collective semiconductor market for AI-powered stuff. And so you're going to see, as I said, I talked about AMD. Of course, there's Intel. Intel will be interesting to see. Of course, their foundry business is a whole other animal to discuss separately. Qualcomm's got some AI stuff. We've got some smaller players involved as well, doing AI chips for embedded cars. This is where we see ARM, who does the IP for these chips, also benefiting from all of this, that whole spectrum on the semiconductor side.
Anytime we see a new hype cycle in a promising technology, and AI certainly fits the bill, you see a couple of leaders, sometimes only one, really race to the head of the pack, and then you see a game of catch up, but not all the laggards eventually catch up. And in fact, there's a pretty big bifurcation a lot of times. You have winners, you have losers. So in this game where we have the clear leaders, now we're playing a game of catch up with some laggards. How do you differentiate those?
It's a great question. And, there's not necessarily an easy answer to that. I mean, look, the bottom line is there are some companies who are going to be really, really focused on the AI piece of things. And I think you're going to see a lot more companies who are just trying to, catch themselves, if they can, to that fast moving train. And those companies may not see the kind of benefits, and they may be in the long run the ones that have other challenges. But some of them, again, are diversifying, and AI is actually a tiny piece of their business. I mean, I talk about Intel. Intel doesn't have any NPUs for now, and we'll see what they do. But they are looking at building out that foundry business, which is a whole new opportunity, working with some of the cloud guys. So, we may just see a different focus as some of these tech companies companies who've been a little bit directed towards AI, maybe moving away from AI into other areas. Because remember, there's more to tech than AI. I mean, yes, AI is the big story now, and everybody wants to talk about it and be associated with it. But there are still traditional other elements that are going to be part of this. And tech is just more and more embedded into our lives, into the automotive market, into smart home, into factory automation. All of these things are still going to benefit from the tech that we see from a lot of these sort of more peripheral players from the AI perspective.
A lot of what you just mentioned makes me think about Apple, and we know that Apple has had a tougher year to date than a lot of its peers. Is the Apple dip still investable?
It's a great question. I mean, it's been hard to bet against Apple at all for the last decade or so. And even at times when you thought maybe, something was going to happen, they've managed to pull themselves out of it. It's a little harder this time, right? I mean, now you've got the concerns in China, you've got all the DOJ stuff, you've got the EU actions. They've killed the car project. They do have the headset, but we'll see. I mean, I think that's going to be more modest than some people initially predict. And we haven't seen anything dramatic. I'd love to see them do a foldable iPhone. I think that's something that the market would be interested in, something different. So I'm hoping that Apple will pull some rabbits out of its hat. It's done so in the past, and I'm not convinced it can't do that now. But I think in the next couple quarters, it is going to be tough.
All right, Bob. Well, thank you so much for joining us. We really appreciate it. That was Bob O'Donnell, TECHnalysis Research President and Chief Analyst.